Good morning, ladies and gentlemen, and welcome back to the Alpha FX Academy. I do apologize, but I couldn't post any video last week because I was introduced to Mr. COVID-19. Now, those of you who didn't have the virus yet, this isn't a nice experience, and I definitely recommend to all of you to take precautionary steps and listen to your local health advisors or medical advisors or whatever you have in your country, and especially protect the elderly. This isn't a joke, this is serious. But having the COVID-19 isn't an excuse to make profit. So I was trading secretly, even though I felt really weak and coughing my brain out. I was looking at the market, but I wasn't active to post much to social media and even to the private Telegram group. Although I did post some setups which, if they took it, they could make some profit. Now, in this video is going to be really short this week. I'm just going to recap quickly what happened last week. And also I spotted an opportunity just now, so this is why I'm making the video. So everyone outside the private members group could take some profit with this opportunity, but make sure you watch the price action and manage your risk, because price could go either way. You know, financial markets are sometimes unexpected, and doesn't matter how much you learn or how much experience you have. For these sudden moves, you cannot protect yourself only with risk management, because in trading the only thing you can control is your risk management, nothing else. So looking at the chart this week, last week actually, there was the FOMC meeting when the price just skyrocketed from 1727 all the way up to 1756, which was a strong resistance level. So we were waiting price to tap the 1750 area or 1760, and since that the price came back the following day and retested the 1726 area, and since that we're just bouncing within this wedge. And as soon as the price formed this wedge, I saw the opportunity, because we love the wedges. Wedges are easy to trade, and they have huge profit potentials. So this week, if I just fast forward, currently we see that the price broke through this wedge. And if you go down to a lower time frame, you can see how we trade wedges. We wait for the breakout and then the retest, and then we enter on the retest. Now, if you go down to a lower time frame, this was a scalp trade I placed and posted on social media. So as soon as the price broke through the trend line, you see that this blue candle, which was the retest, and you have to be really alert to catch these. And this is a scalp trade. So as soon as the price broke through, I waited for this blue candle to come back and retest, and look at this. It just barely retested, and as soon as it tapped into to retest the trend line, and it just melted. I tried to post a picture on the left hand side of the screen. You can see exactly where I entered to this trade. Now, looking forward, going back to the 1 hour time frame, we can see that okay, let me just zoom out. We can see that the price did the actual higher time frame retest of this level. So let me just mark this. So if you use the Fibonacci or Elliott wave or whatever strategy you use, it will probably give the same result. That this is a, let me just change this. So this area, well, actually the 1736 is the point of interest. So this was the area I was waiting to enter into a short trade, but because the price, I realized all the buyers are getting exhausted, so I entered today into 3 sell trades, which was quite good scalp, because you can see on the left hand side of the screen again that I expected the price to come back to the 1726 area, which is a bloody strong support. You can see that if you look left on the chart, this was the area right here. This was the level where the FOMC, during the FOMC meeting, the price just skyrocketed. So this is an extremely strong support and resistance level. So now what you have to do, guys, is watch price action. I'm going to mark with a bold color this level, because it is a bloody strong support and resistance. So there you go, strong support and resistance, just to highlight the importance of this level. Now what you have to do is, because this move has already happened, so let me just mark. So I entered 3 trades at this level, and partial closed all the profits because we see that this is a strong support and resistance. And now what you have to do is watch price action carefully, because there is a high possibility that the price will just come and bounce back from this level, because if you look left, this is extremely strong. But if the price breaks through this level, meaning that the price, you know, candle, the body of the candle closed below this level, and this is a breakthrough. So we're looking for a candle which closed below this level. Let me just put it here. So we're looking for a candle of which body is closed below this level, which is a confirmation that this strong support level is now invalidated. And as soon as this happens, what you have to do is wait for a retest of this level. Now the retest might happen on a smaller time frame, just as happened here. So if you go down to the 15 or the 5-minute chart, you're looking for a candle or a retest of this strong support and resistance. Now if you don't have time to sit in front of the chart all day, what you have to do is, you know, just use whatever strategy you learn. Probably all the good strategies should give you the same result, and identifying this as a strong support and resistance level. So whether you use Fibonacci, Elliott waves, or RSI, MACD, whatever you use, you can sell. You can set a sell limit to this level, and if the price breaks through this level, there's about 80 to 90% chance that the price will come back to retest, because for two reasons. If the price is in a bearish market direction, we can place our trend line, and what price does in a bearish market is it creates lower highs and lower lows. And if you look on the chart, you see that we have this high here. Let me just mark high. We have this high here, and where did the price create the lower high? It created here. So let me just mark this lower high. So it gives us the market structure by creating a lower high. But if you look left, it lines up exactly with the previous low. So this is a beautiful market structure, because let me just delete this. So imagine these like steps or stairs. When the price gives us nice and aesthetic market structure like this, the highest probability of the new lower high to be formed is the previous low. Because if the price breaks through this level, so if it breaks through this low, then it invalidates the market structure, because then it creates a higher low, because this was the low, and then it creates a new higher low. But because the price now created a lower high, that tells us that if the price breaks through, it will create hopefully a new lower high. And if you look at the chart, which level has the highest probability or the best potential to create a new lower high? Well, if you continue drawing, imagine the price breaks through this level. Okay, how do I delete this? So if the price breaks through this level, the highest probability to create the new lower high is the previous low. Let me just put it here. So I would imagine that the price, if it breaks through this level and then come back to retest this level by creating a new lower high. And if you look back in the chart, or if you backtest any of the currency pairs or gold, you will see that sometimes you get this beautiful market structure. So once again, you want to wait for this support and resistance level to be confirmed, whether it's gonna hold up and the price breaks through this bearish trend line, or whether the price is going to break through this support level, invalidates the support, creating a new low, and then you have to watch price action to come back to retest this level before you can enter into short. Whichever direction the price goes, I have to highlight the most important things, guys, the only thing you can control in trading is your risk management. There's nothing else is granted in trading. Nothing else is fixed. Doesn't matter how much time and effort you put into learning the financial markets. The number one thing you can control, then the only thing you can control, is your risk management. So therefore, do not risk anything more than 2 to 3% when you trade. And for gold, use a higher stop loss, maybe $4 to $5, just to be safe. If you're trading on a smaller time frame, you can use, you know, $1 or $2 depending on your entries. So for example, at this trade, I used barely $1 trade stop loss because I saw this rejection candle and also other confirmations which I explain in the gold scalping course. But so I used a smaller stop loss, and if you look again on the left hand side of the chart, this trade was, I think, let me just do a quick calculation. So this trade was, you know, 1 to 87. No, not 87, 1 to 8 risk reward ratio. So if you trade on a smaller time frame, you can use a tighter stop loss. If you trade on a higher time frame, make sure you leave yourself some room to wiggle. Again, guys, this was a quick video midweek. I'm aiming to do another video on Sunday if I get better, or I don't think will because of COVID, and try to post some analysis and what I expect on gold next week. Until that, if you enjoyed the video, please hit the subscribe and the like button, leave a comment below, and see you on Sunday or next week. Have a good week, guys. Bye.